All right, it's that time again. Larry Mastropieri, broker, owner of the Mastropieri Group, alongside myself, John Laws of Discover South Florida. And we're talking about all things going on with real estate in South Florida. Larry, I know it's your alma mater, the Florida Atlantic University, fighting Larry Mastropieri's. And evidently, the research park there has made a significant contribution to the local economy over the past couple of years. I mean, you see these numbers and you're like, wow, I had no idea it had been doing this well. I don't know how familiar you are necessarily with the research park at FAU, but according to the Business Journal, this was a little over a month ago, $708 million in annual impact. It says it was redefining South Florida's real estate map. Yeah, I could see, almost $750 million making a significant contribution to the economy. Basically, if you rewind it a little bit, since pandemic, financial and tech executives who have been relocating to Florida, particularly in South Florida, it has ignited a statewide commercial real estate boom. But Boca, once again, has quietly become one of the most strategic winners. Larry, what have you known about the research park at FAU? Was this a relatively new concept? Have they been around for a long time? I wasn't previously familiar with it.
Yeah, I mean, they were developing it when I was there. That was like 20 years ago. So it's a long time. And we spent a bit of time over there as engineering students. So there's definitely a lot of that tech. There's a mix of tenants over there, like anything you could think of. They'll pretty much, they want to focus on, emerging technology type stuff. But I think there's a pizza place there when I was at school. So they'll mix it in. But yeah, I mean, that's a pretty big number overall. I wouldn't have expected that big of a number. There's definitely like biomed companies in there. There's a lot of actual medical companies in there, believe it or not. Now with FAU having a medical school, that's probably a part of that kind of push. It was actually, the research park was founded 40 years ago with a clear vision in mind to create an innovation destination where innovative companies could plant roots just steps away from everything they need to succeed, including researchers. There was a number of people that interned over there when like engineers that interned over there that I know when I was going to school there. So I guess it was in existence there. But I feel like it was a little bit less built out than it is today.
Well, when you think about the timeline, you said 40 years ago. So that puts us in the mid 1980s, and you had brick, you had IBM there, the first personal computer coming out. So I'd imagine, without knowing all the history, that they might have been trying to, continue to build off that same success and draw more tech companies to South Florida, particularly Boca Raton at that time. I don't know how well that worked, but clearly, whatever the case was, 40 years later, we're doing a lot better.
Yeah, I think when you think about universities, you also think about like the funnel, or like where do people go when they graduate. And so like this is like kind of that pathway, right? It's like, hey, there's a research park on site or adjacent. And to your point, here's the FAU Research Center. All of this.
Okay.
Right?
I was actually going to ask you, I was trying to picture where that was. I'm like, is that the one that's right off Spanish River? Where is that?
Yeah. And so what's cool about this is, from a real estate perspective, you have this here, and then Penn, Florida has plans to develop this into a massive, like,
someday,
new Meisner Park type territory, right? With office buildings, tons of retail, restaurants, like everything you could think of, residential. So this is like all kind of connected: University Village to the research park, then to Palm Beach State University, which is right there too, and then Florida Atlantic University right here. So,
off the top of your head, has there been any developments with that? Because I feel like we were talking about that a few years ago when you did videos on it.
I think they're gonna work through their issues at the place?
Oh, Mandarin.
The Mandarin.
Oh man, the Mandarin. It's like the bane of all progress in Boca Raton.
Yeah, totally. So, I mean, so I think they're going to work through that because that's them. And then,
Right.
and then I think they'll have a breather and or decide if they're going to sell this darn parcel and give up on that altogether and just hope that they made some money from that side of the things, just like appreciation.
Yeah.
And yeah, so I think until they get that done, I don't even think the city of Boca Raton or like wants to even hear about them talk that. Plus, I don't think. I mean, this is a battle. This is going to be a battle because neighbors are going to have,
Oh
issues.
yeah.
So like you're going to have residential pushback. This isn't like building in this territory, which we talked about a bunch, which is pretty easy because it's all commercial anyway. So building some rental apartment building here is not as hard. But to your point, I mean, this is very adjacent to the IBM building, right?
Yeah.
This is right here. I mean, this is like all connected. Boca Raton Innovation District right here. The university project here with Florida Penn, and then IBM right here. I mean, we got a lot going on in this little territory, and they've broken ground on. Most people don't know about this. There's a project to build a whole bunch of townhomes right here.
Oh, I remember that. Have they finally been working on that?
They've been moving dirt over here last I drove by. So these are likely to be rental townhomes at like $7,000, $8,000, $9,000 a month is what they claim they want to rent them for, which might be doable. So you got this. Yeah, you just got a mix of activity around FAU. That's definitely interesting. So
you brought up a good point with the neighbors that back up to that University Village project that we may or may not ever see. And obviously they're, don't like having the noise and the traffic. But my question would be, from a real estate perspective, wouldn't that increase the value of those properties being next to that, or no?
I see it as helpful. Because like then you all of a sudden become very walkable, right? Because now you have a single family home and you can walk out your backyard into restaurants, downtown type environment. Pretty cool. And you're adjacent to, all the other stuff we just talked about. Pretty good. Oh, I wanted to flag this. So this is kind of interesting. Some success stories out of the Innovation District here. ModMed, now valued at $5.6 billion. And this is a company that provides specialty-specific software solutions for doctors and medical practices. Other successful companies, the Silver Logic, it's called, software consulting and development company, and Shipmonk offers technology-driven e-commerce fulfillment solutions for growing online brands. These are things that are like being incubated in this park, this research park, right?
Yeah.
Which is kind of cool. So there's that innovation right there.
I don't know what it is. Shipmonk has me laughing.
Shipmonk, yeah, that's kind of great, right? Yeah.
Anywho, that's interesting. I mean, there's so much going on there, but of course, so often when we talk about all these incredible developments happening in Palm Beach County, we find ourselves in West Palm Beach, and you can thank Stephen Ross and Related Ross for a lot of that. We may have talked about this before, but it is still interesting. Billionaire Stephen Ross, this was about a month ago, had locked in a $250 million refinance for the luxury tower, the Laurel, which is a place that, a lot of people have not heard about yet. But it really says something about, one, the commitment to the area, which not that was ever in question with Stephen Ross, but two, with certain or uncertainties with the economy, you sure as hell don't see Ross slowing down for anything, except maybe the Miami Dolphins, but that's a different discussion.
Yeah, this is some photos of the Laurel. This is a 1-bedroom, 1-bath balcony unit that is available in November for $4,600 a month. So almost $5,000 a month for a 1-bedroom in this luxury building. And so they took a loan on this place for $250 million. They just refinanced out of it. And let's see the details of the deal. So there was $110 million that was fresh financing, and then there was 140 million that was debt that was assumed. So they tacked on another 110 million dollars on top of the debt they already had on the project, which is wild. And it was backed by a company that Ross has relationship with and has done business with before, Ares Management, which manages 450 billion in assets. And so this project was delivered in 2024, the Laurel. It's a 21-story property right by City Place. And City Place was developed again by Ross.
That was one of the older ones.
Yeah, that was a 2000 project. They're obviously updating things now in that area a bit, and that's 72 acres that project sits on. So, and it's like basically this like outdoor open air mall environment.
Oh yeah,
with a lot going on for anyone who's not familiar. Yeah,
I was gonna say I've been down there quite a few times. That
is the downtown. If you go.
Yeah.
Yeah.
I was going to say, when it's all said and done, I wonder like what percentage of related Ross will have had a fingerprint on downtown West Palm Beach, because it's going to be a pretty high percentage.
Yeah. Yeah. And so for anyone who's like, where is this building? It's, as we just talked about, it's like right in the heart of City Place, right here. Right. So they got developments going on all around this. This one just came up and was finished, as we just discussed. And it's super walkable, which is great. So it's uber luxury and super walkable. 322 high-end units with floor-to-ceiling windows and Italian kitchens, Bosch appliances, keyless entry. And this is an apartment building. This is a rental building. This is not like you don't go buy this. It's not a condo unit. So, yeah. So this is another big win for him.
Well, I was going to say that's fascinating in its own right, too, because so many of these projects that we've talked about with the high-end luxury have all been condos, buy to own more or less. But not this. I mean, not
this luxury building, which is super interesting because it's like super luxury, but still in a rental apartment. And, that's kind of that it's probably needed there, right? So he's been like strategically placing certain things, right? He'll build high-end residential or high-end office buildings, and then he's like, hey, we need to put up some condos, right? And then he's like, hey, we need to put up some apartment buildings, luxury apartment buildings to serve the Class A tenants that will be moving into these office buildings with their employers, right? Goldman Sachs, as an example, ServiceNow, the AI company that he just made a deal with, right?
And so, I wish I understood more the science and the strategy that goes into those decisions of deciding, what kind of development are we going to put here? What kind of development are we going to put there? Because it's like, my God, they're practically their own city planning, committee.
100%. 100%. And then you throw in like 2 or 3 other billionaires that are running around over there. And then
right,
you're like,
Jeff Green and I'm sure others.
And so then you have like the group of them city planning basically together. And that's that. Right. So it's kind of interesting. So we already mentioned this, but Ross has a huge track record here. We just mentioned 360 Rosemary, which is that office tower, 300,000 square feet. 20 stories, right? One Flagler, 25 stories, 400,000 square foot office tower, also completed in 2025. 10 and 15 City Place, which is 2 Class A office towers. Again, he's like stacking up, like you said, city planning around here. South Flagler House, 28-story condo tower. Shorecrest, 26-story condo tower, 140 units. So, and a lot of these are like recent, like deliveries. This one was, Shorecrest, February 2025. One Flagler completed in 2025. 360 Rosemary has been around for about 4 or 5 years. 2020 completion. 10 and 15 City Place, 2025. I mean, and most of these things are completely leased up or very close to being leased up.
Right.
The absorption that he's seeing here is bananas. And so when you have so much going on in a specific area, you can really business plan really well, because you're like, hey, this thing sold at this rate and we expect that there's more demand. So we'll go ahead and put up another one. Or like, hey, we didn't sell to 50% of the people that came through here for this condo building. We probably put up another one and we could probably charge this or more for the next one we put up, which is just like his plan. right? And so it's
Yeah.
just super easy. And that's what these guys are doing. And he's doing this in Pompano too, right? That like,
Oh my God. I mean, which I know we have that on our list of things to talk about. I feel like Related Ross has taken over Pompano.
Yeah.
Isn't that what we have next on the docket here?
I think so. But before we go, I think you'll appreciate this. Aries Management just bought in 2024 a 10% stake in the Dolphins and the Hard Rock Stadium.
What is that today?
That was December 2024. They did that.
Okay, because I was going to say, I mean, with all the talk of them canning their head coach yet again, you know, without getting too far off topic, it amazes me how successful Stephen Ross has been with all of this, you know, business side of things, which tells me, if I knew nothing else about the guy, he clearly has a good judge of talent when it comes to building a team that has put together all these projects, right? Why can't you get that done with the Dolphins? Is what people ask me all the time. And I'm like, I don't know, because you got to understand, it's like, it's such a dynamic with pro sports, especially the NFL. It's like, these are so many guys that have had success in business, right? In any number of facets. So they think it's like a one size fits all, like, oh, I've done that, I could be good at pro sports. No, it is so counterintuitive. It's like being, you know, a English professor and then suddenly having to conjugate verbs in Mandarin Chinese. It just doesn't work. But you can't tell him that because, you know, hey, Stephen Ross has done well with everything else. So this is like, it's like his pet, I guess. I don't know. Anyway, that's just voicing for the frustration of Dolphins fans. I'm kind of indifferent to it, to be honest with you.
Yeah.
Yes, let's go to Pompano Beach, where Casamar condos, my God, it's already sold out, a $350 million sellout. When it comes to real estate and business, the man doesn't miss. This is incredible. And it's not Miami or Fort Lauderdale. Yeah.
This is yet again Related Group, right? Yep. Related
over and over.
Yep. Yeah. $350 million luxury tower from the Related Group. And this is like, to your point, just like another one on the list. Check it off. So this is where it is, just south of 14th Street, right on the beach, Casamar. We've talked about this in the past, right? This has been under construction for some time, but now we're kind of hitting that, like, we're done. We're sold out phase. And for context, this is a 21-story oceanfront condo building, right? And this follows Related's earlier success, as we just mentioned, with Solomar, that was completed in 2023, which was a 105-unit oceanfront condo tower, launched in 2020, and sold out super quick at around $800 per foot, despite like the chaos of the pandemic, right?
Yeah.
They still knocked this out. Really, that was a good driving force for them. But $800 a foot, like if you look at that and you compare that to other areas in South Florida, it's kind of a deal. If you're like, I want to be on the beach, but I don't want to pay these crazy Miami numbers, Fort Lauderdale numbers, Boca Raton numbers, even in some cases West Palm Beach numbers, this Pompano is a good option, right? $800 a foot. Because like if you look at just downtown Boca Raton, for new construction, like not on the beach, just downtown Boca Raton as an example, you're looking at $1,000 a foot, you know, and you can easily go to like 11 or 12, right? And over here you can get on the beach for $800 a foot.
Really? It's that much less.
It's so that's like they've got this like sweet spot, right? And as they continue to put luxury buildings up in this area, it kind of supports itself. It becomes like, okay, there's less and less rundown product, because not only is Related putting up buildings, there's other developers running around there doing stuff, right? There's projects going on, and so they're knocking off a bunch of these, and the city's invested a bunch in the downtown and specifically the beach part, right? Because of we talked about this.
I guess my question is, why Pompano and not, say, Deerfield Beach?
I think Deerfield's just small and just hard to find dirt. I think that's just the answer. I think if you found something in Deerfield that made sense and you could build on it, they would do it, right?
Okay.
I don't think they would.
I didn't know if they were under some of those same building height restrictions as other parts of Palm Beach County or something.
Well, let's just like Deerfield is right here, right? And so Boca's right here.
Yeah.
Okay, this is like the start of Boca, like right around here. Okay, and so you have not a lot of stuff.
It is kind of small. I always forget.
You gotta negotiate and like buy. If you're buying condo buildings, you and I know this. We talked about this 100 times. It's like if you're buying this condo building, you gotta figure out how to buy everybody out. You know, the whole game.
And you got the road right onto
Yep.
the beach. I forget about that.
And so so you're not direct ocean. You don't have private beach. Whereas like you come down here, Pompano, if you're on the water, you got the private beach, right? So yeah. Also, this is just north of Fort Lauderdale, which is like efficient to get into Fort Lauderdale. You know, some people, everybody has different preferences when they come here, but I've worked with a number of people that were very hot on being in Fort Lauderdale because it's like a city or like a more of a major city. And so
without being Miami.
Totally. So they've considered, and Miami's just a totally different city. So it's like if you probably have a preference, either Miami or Fort Lauderdale being a little bit more of an American city, Miami being a little bit more of an international city, and you feel it there, right? For sure. And so you might have a preference. And so if your preference is Fort Lauderdale, you may consider exploring up to Pompano. And that's what we saw a lot. It's like, okay, showing houses or condos in Fort Lauderdale, but we'll bump up to Pompano because there's some interesting product there. And then all of a sudden there's real interesting product. There's like better priced new construction on the water. Makes sense. That's why these things get knocked out really, really quickly. This is, and just for context, I pulled up a bunch of sales in the area here. So this is, some of these aren't Casamar, but most of these are Casamar. So looks like, let's see, the highest sold Casamar unit was 4.6 million. Let's see if that's true. Let me sort this again. Okay. 4.6 million Casamar sold 2 days ago. Congrats. All right. So, but look at how many units are active in this building. This is what happens too. Like,
what are they, resales? Because I thought it said it was sold out. Or
it's usually, so it's probably let's see, they don't always say in here, but they'll sometimes say if it's developer owned or not, right? And so if they're claiming it's sold out, and so these are probably speculators who are putting listings back on the market afterwards. And so we've seen people have a lot of success with this from like 2010 to 2024, right? 23, 22. And now we're seeing people like who speculated and bought in 2022 as an example, and now trying to unload in 2025. They're not getting. I
was gonna say it's like musical chairs, and they've kind of gotten left standing.
Yeah. So yeah, they're kind of getting jammed. We're seeing this a lot in Boca too. So, and why? Because look at how many actives. I mean, you can count this up. This is like 30 active units in this building, which is pretty wild. So, and you can see price reduction. I mean, this is a big sale. This must have been this. So this is like 11th floor. So not the highest floor. Let's just take a peek at what this looks like here for everyone's benefit. So 1,300 a foot or something like that on this one. Okay. Ooh. I mean, pretty huge. 4 bedrooms. Pretty epic ocean view, wraparound, corner. They got 2 showers. No. I think that's a water closet. Water closet and shower. Okay.
I'm not going to lie to you. I don't even know what a water closet is.
Toilet. Okay. Yeah. And so the wraparound view, plenty of light in this thing. Yeah. Big. Yeah, that's a big number. That's a big number. Wow. Another one sold for $968 a foot. So, they're saying average 800, which is possibly true. The average might've been 800, but there's some above it. Like if you look at all these, look at these asks per foot, 14s, 12s, 13s. most of this stuff is, and it looks like the stuff that has traded, besides, forget this one for a second, like the outlier, stuff that has traded recently, 968, 887, 855. And then if you go do some homework on this, you can see what these guys, well, that's Golden Shores, different building. So 2 buildings here, 968 and 887. So they're trading in this like 8 and 9 range. And these units are for 1402 and 404 sold for 887. So it's just kind of interesting to see.
So wait, so did they make money on it?
I mean, I could pull up the data.
I mean, I'm kind of morbidly curious now.
We could, let's see. Let's see what they paid for this. Now we're getting in the weeds here. Let's do this. Here you go, guys.
All right.
Is it not showing up? Let's see.
What? Oh, yeah.
Barn. I've done this once or twice before. Okay. Let's see. So this looks like a developer-owned unit because there's no other sales history here.
I see.
You're right. So
these weren't even speculators.
These weren't speculators. Let's just pick another one. Just a random unit.
Yeah.
See what.
I feel like
we're gonna
are we being lied to here?
We're gonna debunk this article.
Yeah.
In seconds. Let's see. 504. So somebody bought this for 2.216.
Okay.
They closed, and let's see, did they just pop it on the market? Okay. And they're listed for 3,295, right? They've been on the market 58 days. So for the most part, this thing's probably, the article is probably valid. They're probably sold. Most of these are probably sold. And you can see people just trying to mark these things up. They're trying to mark it up. What is this? They're trying to mark it up $1 million.
Well, I was going to say, I mean, that was like what, 50%?
Yeah. And so sometimes you could see it here. Sometimes you can't. You could see like when let's see, sometimes they say when they went under contract doesn't, or like, cause what happens is like these guys will close, 3 months ago, but they've had a deposit for $500,000 or some big number, 10, 20, 30% of the purchase price, for like 2 years or 3 years held on this thing. They may have put a deposit down in 2023 to buy this thing for like a few $100,000 possibly, right? Over time. And then they actually closed 3 months ago and then they put it right on the market. I mean, they put this on the market literally a month or 2 months after they closed, right? So not even 1 month after they closed on the thing. So this is clearly like likely speculation. And this is common, but the developers don't mind because they're trying to get off all these units.
Well, that's what I was going to ask. I know when we've talked about some of these other developments that it seemed like they were trying to draw on people that were actually going to live there because you want to build a community and, make it a friendly living space. But it's like, is that when you get into these ultra luxury high rises and such that it's just nothing but speculators?
Yeah. So this one too. So they bought this, they closed on this 3 months ago. They paid $2.6 for it and they got it listed for almost $3.6. So again, close to $1 million. They're trying to get here, but like they have there's so many units like them on the market. This is going to be tough. But to answer your question, you and I have talked about this, like, for example, GL Homes community, like the actual, like the neighborhoods that are trying to do family oriented stuff. What they'll do is they'll say, hey, number one, no investor rule. So we don't want any investors buying. We only want primary, people are going to use this as primary, secondary homes, right? Period. And then after you close, you have a restriction on the deed that you cannot sell the home for a year. So you have to hold it for a year. So like, even if you do play the game and say, I'm going to move in, you have to get a special exemption to sell within a year of ownership.
So that's
in
how they
GL's.
try to curb it, I'd imagine. Yeah.
Yeah, and you know what? GL's building, like they'll finish one like 300, 400, 500 unit community here, and then next door they'll start the next one. So like if they sold all these to speculators, like that wouldn't be great either. Number one, it's not going to be this family oriented community. It's going to be rental. It's going to be a little different experience, which they're trying to not have for their benefit. But also like if they just dumped, 30, 40 homes on the market right after they finished up and closed out, what's going to happen to their new community? They got a ton of competition here from homes that haven't been lived in yet, right? Mm-hmm. And that's why they always one up every building you see or every community you see. They try to one up. Hey, this has a new model. It's got this thing, or it's got this right. bigger, community space. It's got whatever. You should live in the edge instead of the Palm, right? For GL, it's like the edge is new and it's going to be better than Palm, even though we just built Palm like literally 2 minutes ago.
Which, yeah, I mean, what was those Lotus Edge, Lotus Palm, Lotus this, Lotus that?
Totally, exactly. So they're trying to compete with that. So so jumping back to related here and what they've built, they've also finished. They're also working on Waldorf Astoria in Pompano, which we were at recently. Yes. And 70% pre-sold, 28 stories, 92 units. The W residences, which we're going to tomorrow, actually, which is under construction, 24 stories, 373 units. So that'll be exciting. We'll get the inside scoop on what's going on over there and report back. But generally speaking, I mean, they're just knocking these things out. There's a ripple effect in this downtown market, and this is what Related likes to do. They like to find a market and just dominate because they can like build the business plan, right?
Yeah. I mean, again, it's like they're like their own city planning committee. They own it all. That's crazy.
There's been a $2 billion downtown revitalization effort, right, to kind of get Pompano going. This is from the city, let alone the private developers. So this is that's what kind of spurred the private groups to start coming in and building these things as they saw Pompano committed to making those investments, right? So
I mean, and it's kind of fun, not going to Pompano every day or West Palm Beach every day, that when I go every few months, that it's like there's always something different. It's crazy how much Pompano has changed, even not just with the high rises, but just with smaller developments all around, like that Atlantic Boulevard and things like that. I mean, you can just tell it's going through a transformation. There's no question.
Absolutely. It's so interesting to see this speculator dynamic, and it's going to be so interesting to see how this all plays out, because this isn't the only building that's doing this. Like Alina in Boca, any of these newer finished projects, you have tons of guys that were like in on this, and because they made money 3 years ago doing this on the other ones,
thought it would work again.
Yeah, and they kind of got caught. Personally, I don't know how they're going to get out of this thing making a respectable return. Let's see. I think they're going to be like somewhat like frustrated if they make money at all.
Well, I was going to say, just be happy to break even. My God.
Yeah, but that's like $1 million at what they could have been earning 10% a year. Yeah. It's like, holy smokes, dude. Like that's like, it's net lost money, especially with inflation over the past few years. It's not like, it's not where they want to be for sure. Not a win. So,
all right. Yeah. Well, evidently Hallandale Beach is winning. 24 projects in Hallandale Beach have either been approved or proposed. Everything from luxury towers, hotels, condos. It is transforming into the next Broward County boomtown, because Pompano was the last one. I guess we're already moving on to other things.
Yeah.
That's interesting how we just, like you said, it's like developers get a foothold on something and then it's like, yeah, just take over. I mean, if it works for you, but how?
But it has to be, they have to be welcomed by zoning and the city, right? And so if they're welcomed and they see investment in the community from the city and master plan strategies that align with where they can make money, then they come in. And so all these cities in South Florida specifically are really watching each other and saying, oh, that worked over there. Like, and that looks good. And we like the results. So let's kind of like mimic that or learn from what they didn't do or did do. Right. And so Hallandale, again, just another city in South Florida trying to make it happen.
I mean, can you think off the top of your head any examples of ones that have said no to ambitious developers who want to come into town?
Boca.
that was the only one I could think of. I mean,
yeah.
I mean, my God, we can't even get a government campus going.
That's a little different though too. So so that was city-owned property that was being, in essence, given to these developers, right? And while this stuff we're talking about, these developers didn't like buy or take land from taxpayers. They bought the land somehow, some way, and tore down what was there. They were strategic about it. The thing about Boca is there are projects going on, and there is a fair amount of resistance because Boca wants to stay quaint. Whereas like Pompano and Hallandale, these are all like Fort Lauderdale adjacent communities and cities, and like they're already like built up. So to build this big project in a specific area, there's substantially less pushback. That same goes for West Palm. I'm sure related, feels that way. Like moving into a Boca or even a Del Rey is like much harder because these are like that city by the sea charm that everybody wants to maintain. There's all these restrictions in Boca. You can't have car dealerships or gas stations on Federal Highway. Like, well, look around. You see any car dealerships?
I know. As soon as you said that, I was like, yeah. I mean, because I'm like in Northeast, and it's like right as I get into Del Rey, there's a whole bunch of car dealerships.
Boom, right over the line. Yep. And same as you go south. See, you roll right into Deerfield and Pompano, all the car dealerships on Federal Highway, right? So Boca has eliminated, which actually I kind of like.
Yeah. So, no, right? I never even thought about it.
Yeah. Yeah, I think it's great. I'm pro that. Now that's what Boca's been able to do, whereas like these other cities are just like completely already built out. That ship has sailed. There's no changing this. Like you make that decision 100 years ago, not today, and that's what Boca has done. And Boca is a very wealthy city from their cash stockpile, and they've done really well to maintain infrastructure, et cetera, et cetera. So yeah, but this is Hallandale Beach right here. So this is Hallandale. This whole area right here, all the way out, right? We've talked about it. We've talked about some developments over here in the past, but this is just kind of a highlight of, hey, there's 24 major projects that have been approved or are in the pipeline, from towers, hotels, apartments, condos, and then a bunch of single-family home projects, redevelopment stuff going on, individual specs, right, that are just like being knocked off in the city, and the city's like on board with it. Yep. And the city defines major developments to include any project containing 10 or more residential units or 4,000 or more square feet of retail. And so they've been pro major developments, right?
Right. Oh, well, Atlantic Village, we had talked about that before. That's where FIBA's America's headquarters just went.
Yep.
Okay. Now I got a little more of a picture.
13th floor is showing up here. BH Group, Grupo Echo, PPG Development, which is a pretty big developer out of Miami. They're all over this, and it's because of Hallandale's pro developer mentality. So yeah.
I don't see anything about the Live Local Act. I feel like every one of these stories we talk about always, well, thanks to the Live Local Act, we're breaking ground tomorrow.
I think there is that's a good point. There's probably some in here, right? But I just, I don't know which ones off the top of my head. Again, a lot of these are going luxury, right? The Shell Bay, 1.35 million buy-in for country club, right? That's like a bananas number. Most expensive country club in the United States, 150 acres of pure exclusivity, right? So You have Oasis Hallandale, 675K on the bottom end, 4.4 million on the full end, fully sold out on the commercial side. So, yeah, the parks at Hallandale, we go down the list and like show you each one of these, but there's just so much here. Yeah. Oasis Hallandale, 50, we just talked about it, but 59,000 square feet of retail, just like big numbers. So okay. Homewood Suites is even getting in on it. Hilton's trying to get after it. They got a project on Federal Highway here too. So,
all right. Do we want to move on to
Lake
Worth Beach? Why not? Because we got Midtown Capital scoring a $57 million bridge loan for a project. It's to finish a brand new 230-unit apartment community, and it's sending a message to the South Florida market. I don't know what message you could send at this point. Everybody's building. But it's an institutional capital that still believes in multifamily. Berkadia. I'm not familiar with Berkadia. They arranged
they're the lender. The
right.
57. Yeah. 230 unit apartment complex, right? I'll show you the location here on the map. This is what it looks like. Just for context, this is some of the, let's see. Here's some of the interior of this one. Stylish floor plan. So this is multifamily. This is the building. And so in Lake Worth, what we've seen is like you get a little bit more dirt, right? You can kind of be a little bit more spread out. Obviously, the height restrictions are lower than Hallandale or Pompano. That's another reason why Pompano is so fun for these guys. But this is right here. So we were watching this project for a long time because this is right by one of our buildings that we purchased over here. And so we were watching this. Actually, we knew this was coming up when we bought this building, and we bought this building in like 19, I think. And so this has been in the works for a while, but it looks like they're still getting after this. It's taking them a while. You know what I found interesting about this building? This is a multifamily building. Here, I can show you actually because it shows on the map. Yeah, this is great. Look at this picture. Okay, let's see. Notice anything about this?
Is that wood?
It's all wood.
Wow.
It's all wood.
And that's legal?
I was surprised. I was surprised that they were building these things wood. I just think it's a little, here's the thing. It's a multifamily. So they're building it cost effectively so they can get the return they need, right? Otherwise, they may not have been able to get this done with this type of, with like a more concrete and steel type building. Clearly it meets code. Like this isn't like, it's fine, I'm sure. But I was just surprised to see, just like you said, is that wood. And this is me when I was driving by it. I'm like, I'm talking to my business partner who we buy these buildings with. And I'm like, hey, like FaceTime. I'm like, look at this thing. It's wood. We don't buy wood buildings.
I thought from everything I've learned in my time here, I thought like you couldn't.
Yeah. So you clearly can. You clearly can do that. I'm just like
at your own risk.
Yeah, I guess. I mean, code. They got to comply with code and all that, so they're doing it, and it's clearly okay. But I just found that super interesting that it was wood construction. So, and this project's 1, 2, and 3 bedrooms, ranging from 715 square feet to 1160 square feet. They try to really, the features here. This is more of I would call a workforce housing project where like. This is not like luxury on the water type deal. This is for working blue collar individuals primarily in a market that,
I feel like a lot of them are in Lake Worth that we've talked about in the past.
100%. And there's a ton of housing in Lake Worth. There's a ton, like if you're looking for multifamily to buy, if anyone's looking for multifamily, you'll see more in Lake Worth than you will in other areas of South Florida. Primarily just because there's just so much of it. There was just so much built, this workforce housing, multifamily stuff. It just stuff pops up. Thus, we've bought a number of buildings in the area just because of the prevalence of units and opportunity there. But again, and so that just caters to a lot of rentals. And frankly, in the market, another reason why we bought in there is even though there's a lot of rentals, there's not a lot of inventory. Like if you're looking to rent in the area, there's not a lot of options. And a 715 square foot, if it's a 1-bedroom, that's a decent size 1-bedroom. But like up to 1160, 1160 3-bedroom, those bedrooms are pretty tight, right? So it's built to be workforce housing. But they got a dog park and pet spa, which is super important. They have outdoor entertainment space, coffee bar, game room. I'm sure they built this out pretty nicely. The other projects in the area that we've seen completed they're good. In my opinion, they're great. They're good. So, yeah.
Okay.
Yeah.
And it's so funny as we've talked about all of these successful projects or bullish projects, if you will, as I'm going down the list of topics that we're talking about here, coming up on the one now. This was a report from Redfin about a month or so ago, if I recall, that wary home buyers were backing out of purchases more often. And by more often, it was 21% of pending sales collapsed. I think this was in July on record. 58,000 home deals falling through. So, for all of these ambitious, bullish developers of luxury, residential establishments that, for a lot of normal folk, it seems like they are getting cold feet when it comes to buying a house.
Yeah, 58,000 home purchase agreements.
That's a lot.
We're feeling this in our market. This is our market. But like anecdotally, I can tell you like cancellations happen more than they ever did. But we had a cancellation on Friday. Kind of interesting. Property that we had listed didn't hit the appraised number that we were contracted at. About $25,000 less it came in at. Unique situation where there was like an ADU and the appraiser wasn't counting the ADU as square feet. So thus it came in less. If you counted the ADU as square feet, it's an ADU. It's like, it's under air. It's somebody's living in that unit. Like it's a thing. If you counted it, you hit the appraised number, no problem. We challenged it. We suggested they go with another lender to get a different appraisal. Buyer could have done all that. Buyer could have closed this deal if he wanted to. Yeah, he just got cold feet, right? He's just like, hey, if it's not, I don't love that it's not appraising. So he didn't have conviction in the deal clearly, and so thus
it's just a lot of these deals. Yeah, I was gonna say that almost sounds like they're looking for an excuse to get out of it.
Maybe not. Like if everything goes well, they'll do the deal, right? And frankly, if everything goes well, they can't exit the deal. But if something goes wrong or starts to indicate that they didn't do the best deal, and appraisal is great for that, right? Oh, it appraised for less than I offered, less than they were contracted for. Then it's like, well, maybe this thing's not worth what I was going to pay for it. And then we got to try to convince them that it is. And unfortunately, we couldn't really convince him that it was. And I would argue all day that ADU 400 square feet times $300 a foot or whatever we were selling the thing for, totally makes it worth it. But unfortunately, it sucks. That was one we almost had done. And that one's not going to sell now. Right. He's going to pull that off the market too. So not only is the buyer canceled, now he's going to sit for another 3 weeks and try to get it done. And if he can't get it done at that price because he owes so much on the property, he's just going to keep it and rent it out Airbnb. So the price we were selling it at, $650, he was already losing $75,000 at that number. So yeah, not that he had to bring a check to closing to sell the place, but he had already invested an extra like 50 grand more into it. So he was all in. His break even number was like 725, and we tried that and it was not happening. 650 was like, okay, we probably get this done here, but
this was a single family home
in Fort Lauderdale. Specific, exact market we're talking about right now. Yeah.
Huh.
So yeah, let's see. It says Jacksonville. So here, Fort Lauderdale in July had 21.3% of pending sales that fell out of contract, up 20% in July from July of last year. So huge delta year over year, huge delta. And other cities in Florida are seeing the same thing. So this is a thing, and it's all property specific, right? Like if you have the right property, you can crush it in this market. If you have the wrong property, you don't check off all the perfect boxes, you need a roof, you don't have impact windows, not renovated, you back up to a main road, whatever, you just name it when it comes to single family homes, well, then you're going to have a struggle getting it done. Unless you bought it in 2010, then you don't care, right?
No.
But a lot of these people,
it sounds like there's not a lot of that lately.
It just feels like a lot of people have bought things that we're selling between 2020 and 2025, and a lot more 2022, 2023, and they're jammed. They're jammed. There's no question. So, yeah.
All right. Well,
let's talk about
Canadians.
Yeah.
So, Canadians. This is according to the South Florida Business Journal. Canadian searches for West Palm Beach homes dropped 26% year over year. Now, I know you and I have talked about this before, and you had said yourself, you're like, I feel it that, normally we have a lot of Canadian buyers reaching out to us, just kind of getting a feel for the market and everything. And that, since the beginning of the year, that has drastically changed. Would you say that's still the case?
100%. The Canadian and the data's in, right? So like this isn't like anecdotal anymore. This isn't like us suggesting this or thinking this or feeling this. It's true, right?
Mm-hmm.
Less Canadian buyers are in the market. In fact, substantially less. In fact, we haven't worked with many Canadian buyers this year at all. We have worked with some,
really,
but not many. Not many. The move. The condo buyers, and this is part of it, right? So like this is part of the condo market feeling the pinch here, right? Canadian buyers were pretty active in that condo market.
I was going to say they usually were going for condos as kind of snowbirds.
Yeah, that was their like niche, right? They'd snowbird, they'd spend 3-4 months here, and then they'd go home. We've seen less of that Canadian demand, substantially less. So yeah.
So in your experience, I mean, you would kind of point to the struggles of the condo market in general as being the main factor for Canadians not coming back? Yeah,
I think it's not the main factor. It's a factor. The condo market's in like this perfect storm, right? Outdated. Well, first off, Champagne Tower collapses, right? Surfside collapse. Everybody gets scared about that. Oh, will my building collapse, or should I buy something then? Then
really, dude. I mean, people get scared about that.
I'd say there's like doubts about like, hey, are these buildings safe? That building was a 1970 building. Should I buy in a 1970 building? Little concerning, right? And it's like, okay, well, tell me more about the building. Is it safe? How do we prove that? Then there's regulation, right? Regulation forcing assessments, forcing reserves. Then there's insurance through the roof. Increasing HOA fees a lot from insurance. That's on top of the assessment. That's like the assessment's another thing altogether. The HOA fees go to the moon because of insurance primarily. And then you tack on the side, hey, we need to reserve. So now we're adding like an extra $100, $200, $500 a month we need to get to this reserve number because the law now says we have to, which makes sense. Then you talk about, hey, we need to inspect stuff and be up to spec. And now we find out we have all these issues that we have been brushing under the rug because we just haven't had inspections or been managing our building properly. And so now we got to assess more for those things. And so you just like layer in all these things that create massive costs and then basically increase inventory or supply on the market because less people are buying and more people are trying to get out because they got to pay these big fees. And so there you go. High supply, lower demand, prices come down. That's what we're experiencing. And then the Canadians are just like, I'm not doing it. Just to put the nail in the coffin for the condo market. I think that's probably how to look at it. Yeah, this has been interesting. Also, why Canadians stop moving here, right? One argument is the Canadian dollar has weakened against the US dollar, losing about 10% of its value since 2022. We've talked about that a little bit.
Yeah,
We talk about that with clients a lot. I mean, that's a thing. That's a thing, right? So like now, if you're a Canadian buyer, and we've seen this happen, it's like, hey, we don't want to buy cash like we used to. We want to finance it. We'll bring over 100, 200, 300 grand to buy this $1 million condo, right? But we're not going to just like move $1 million over because our dollar's weaker. So now we got to come up with like 1.1 million to buy a $1 million property. So like that kind of sucks. So we're not going to do that. We're just going to finance. We're going to finance it. So again, it kind of makes the market a little weaker just from that perspective when we used to see more cash trades, right? And then let's see, economic pressure at home. Canadian interest rates and inflation are both up. Borrowing costs are higher and investment appetite is down. Canadians who might have bought second homes are now holding off on selling assets to cover domestic expenses, right? So they're just like the economy in general, the argument is not as good as it once was. Okay, and then they talk about the political and market caution, right? Shifting U.S. trade and tax policies have made Canadians hesitant to park money south of the border. There's a perception risk, uncertainty about the U.S. political climate, and property taxes adds another layer of hesitation. And then they say the bigger picture, not just Canadians. Canadian searches dropped 26.6% in West Palm Beach compared to 16% in Fort Lauderdale and 13% in Miami. Nationwide, the drop was 19.5%, showing West Palm Beach's unique vulnerability to the trend. So West Palm Beach has felt the
I know, which I do find it fascinating considering that West Palm Beach specifically is so much lower than Fort Lauderdale and Miami.
Yeah. This is interesting though, too. We talked about this. So they say, who's filling the gap, right? Well, who's filling the gap? Latin Americans, right?
Yeah, right. Which is like, clearly they have no problem still with coming over.
Yeah. Yeah. This is how South Florida is though. Like, it's like just this dynamic movement of like what country, what area makes the most sense to move money from to South Florida, right? So so Turkey was a good example. Turkish investors were pouring into the market. Now, not so much. Less interesting to them now. Okay. Now, Latin American buyers, we can see it here. Countries like Colombia, Argentina, Venezuela are now leading the charge. There's risk at home. U.S. feels safe. South Florida feels like a good, comfy spot, right? Most people speak Spanish. So it's like, okay, let's go do that here. It's closer. So what do? We move money from Colombia, Argentina, and Venezuela. So we lose Canada, we lose Turkey, we lose some other places, and we still get that happening from Latin America. And internal United States stuff, we had a lot of people moving here from just inside the U.S., and that has slowed down substantially, but that was expected anyway. That was like artificially high, right? So, yeah.
Okay. So we want to wrap it up here.
Let's do it.
All right. Well, want to thank everyone for tuning in once again. On behalf of Larry Mastropieri, broker owner of the Mastropieri Group, I'm John Laws of Discover South Florida. Thank you all for tuning in, and we'll see you on the next one.